Hey guys, it's Anthony. I'm live here. Dwell Real Estate. Have a happy Monday evening. It is the beginning of the fourth quarter, and I had a couple of conversations in the last week as we approached the fourth quarter, and talking about some of the reports that I've done over the course of the last year. I guess it's been about a year now that I've been sharing numbers on absorption rate. And then this year, I can't remember whether it was I think it was the first quarter, where I actually started to break down and talk about the different segments that are in the market and the differences in absorption rates and just the rate at which how fast things are selling as they get into different segments of the market, and how much our market is really kind of accelerating as we move into this fourth quarter. So in the last absorption rate that I had shared, and I'm going to share a link to that again, you noticed that the inventories pretty much across the board fell pretty dramatically from the first quarter when we moved from the first to the second. And I'm excited because in about another week to 10 days, I'll complete the third quarter report, and I expect to see the same trend where we're seeing a lot less homes on the market, slight uptick in terms of overall number of sales, and even slight uptick in terms of price point. And so it just got to a point where I felt like I wanted to dive a little deeper into an explanation on exactly what's been happening and why we're seeing some of the trends happen the way that they are. And so a conversation that I'd had last week started around the concept of, is it possible to sell high and buy low in a real estate market today? And the reality is, like, historically speaking, we never would have made that argument or made that suggestion because the market tended to move in similar patterns through different price segments, meaning like entry level or move up buyers, or like top of the market when you get into 2 times median, 3 times median into like the luxury segments. The market tends to be relatively similar until the last couple of years. What we've seen happen is we've seen a lot of acceleration in entry level, and that's happened for a couple of reasons. Number one, we've had a lot of pent-up demand that's been waiting for the market to stabilize. As we moved out of the housing crisis, right, the long-term historical age of first-time homebuyers actually climbed a couple of years between 2009 and 2012, 13, because a lot of first-time homebuyers just kind of sat on the fence for a couple of years, waiting to know a couple of things. Number one, was the market really like kind of at its bottom? Was it safe to buy? Number two, if you remember back in 2009, 10, 11, unemployment was a lot higher. So job security was an issue, if there was a job at all, right? And number three, were people really going to stay in the market that they were currently in? So there were a lot of buyers that just kind of stayed on the fence and waited until timing was better for them. And so what ultimately happened is, all of a sudden that market, like those buyers came into the market now a couple of years later, kind of en masse. So we've had a huge uptick in terms of overall demand, and we had a big downturn in terms of supply. There's been far fewer homes newly constructed over the course of the last couple of years than there were, historically over the course of the last 1 to 2 decades. And so we ended up with a big supply demand imbalance, and we're starting to see some price appreciation at lower levels, at entry levels. And so ultimately that led me to this point, which is it possible to sell high and turn around and buy low? And so what we're seeing as we move in through those segments where we saw a lot of demand at entry level, not quite as much demand at that next jump up, and then a little bit less demand, like a little bit even of a thinner demand as we got into 2 and 3 times median. The reason for that really is because, especially locally, we've also came out of what was a very challenging market where we had a lot of distress and a lot of defaults. And ultimately what that caused was, in that natural upward movement, in a historical reference, today we've had 25 to 30%, right? Actually, we're closer to 20% now, but over the course of the last couple of years, 25, 30% of those sellers weren't a typical normal move-up seller. In fact, it was a distressed scenario. So it was either a bank or someone coming out of a short sale or some other type of distressed situation. So that was like 25 to 30% of the buyers that were absent from making that normal natural upward movement. And that's why we had a real disproportion in terms of a lot of entry level demand prices actually increasing a little bit, and then when you jump up a little bit, not quite as much of a demand, and prices staying relatively stable. And so we've seen that. We've seen that over the course of the last couple of years. We've seen that over the course of the last couple of years nationally. We're starting to finally see that locally, where we're seeing some price appreciation at entry level, still some stabilization in the middle, and then still some challenges when we get into the high end because there's, again, not quite as much demand. So what dawned on me is and I'll share with you this latest post that I just shared that was inspired by an existing home sale report that was just released, whereby the National Association of Realtors took some stats from showing a 5.6% appreciation from CoreLogic, but then they went a step deeper and they broke down the basically what they're calling 4 tiers in each area's growth between July 2006 and July 2007. And you can see the segment, this area right in the middle, the lowest price points, which are basically like first-time home buyers, saw the highest appreciation, right? When you had that little bit of a natural upward movement, a little bit less appreciation. As the prices get a little bit higher, again, another bit of a lesser appreciation. And then when you got to the top of the market, like your high-priced luxury segment, we saw the least appreciation nationally. Now, again, these are national numbers, not local numbers, and our market is certainly a bit different. We're still another probably 18 to 24 months behind the rest of the country, so we have a little ways to go in terms of appreciation. But it was just interesting to kind of qualify and explain what I meant by how we've got a very segmented market, and I thought that this report and this information that NAR just shared kind of hit the nail on the head along the lines of, if you are a first-time home buyer or you're a move-up buyer, right? You're experiencing a lot of demand in the first-time home buying segment. If you're a move-up buyer, meaning you're selling a home that maybe you bought as a first-time as a first-time home buyer, and you're buying a larger home, you have an opportunity now, probably for the first time historically, to sell in a market where you've got far greater demand than we've seen in literally well over 10 years, and then actually be in a position to buy in a market where you'll actually have a little bit of leverage, right? So you can sell in a market where you're a seller's market and likely end up having multiple offers if your home is in, good financeable condition, and then you're turning around and buying in a buyer's market where there's going to be more supply than there are potential buyers that are available. So you're going to be in a position of leverage and be able to potentially buy at a little bit of a lower rate than you certainly would have or would be able to over the course of the next couple of years as this market continues to play out. So moral of the story, right? When we look at the possibility of selling high, I'm going to go over to this absorption report. Right, so that I did a few weeks ago, and I showed the differences between like where price points are, right? So we explained that when it's a seller's market, we see a market that has typically less than 6 months supply, a neutral market being somewhere between 6 and 7 months supply, and then a buyer's market being greater than 7 or 8 months supply. So as we scroll down, and I'm going to scroll all the way down to the segmented section that I did, we can see in all of our towns, right, when you're at the lower level, below median, right, all of the absorption levels, for all intent and purpose, are basically indicating that we have a seller's market at median and below. When you're at 2 times median, right, from median up to 2 times median, we can see that in a lot of the towns, we're closer to a stable market. And then when we move over 2.5 times, like over 2 times median, or what I would describe as the luxury segment, right, we're seeing absorption rates that are far higher. Right? So a typical buyer in today's market that's a move-up buyer can sell in an opportunity where they've got great leverage, enormous demand, and not a lot of competition, right? And turn around and buy. And ultimately what happens is you can buy a home, whether it's 1 to 2 times median or 2 times plus. You can buy a home oftentimes that you wouldn't even be able to build realistically for the cost of for what it would cost you to turn around and build. In other words, you're getting far greater value, more for your money today than you possibly could have at any point in time. So a lot of information, hopefully not too confusing. If you want to discuss more details on the concept of what I mean by selling at a high and buying at a low, feel free to reach out. We've got a great group here that understands understands the opportunities that are in today's market and can help put you in the best position possible to be able to achieve the results that you're looking for. Whether it is in the last quarter here of 2017 or your plans include a move as we move into 2018, continue to follow us on Facebook. Take a look at some of the newest listings as they hit the market. And if you have any questions, please don't hesitate to reach out to myself, any members of our great group here, and we'd be excited about helping you make this move. So again, hopefully this was helpful. Great opportunity today, possibly first time historically where you have an opportunity to sell in a seller's market, have a little bit of leverage, sell high, turn around and buy in a market where you've got a lot more leverage yourself and are able to get a far greater value than certainly we're going to see as we move in deeper into 2018 as the market continues to, in stages, stabilize and then ultimately move up. So great. Hope this was good information. I appreciate your taking the time to watch and would love to have the opportunity to help you with your real estate goals in 2018. Have a great night.